The market has already priced out the 50 basis points. It has priced now at 25 basis points. So he had no choice. Had he said anything else, it would have caused yet more market instability. Look, the Fed is in a really tough place of its own making. I want to stress this is of its own making. The invasion has made the situation more complex. And as you've heard me say, there is no first policy option now. That has gone. It was there last year. It's no longer available to the Fed.
Mohamed, the invasion did two things at once. It made it less likely you do what you need to do, but more important, that you should have done it. That's messed up.
That's absolutely right. And some of us were urging the Fed to move when the window was open because you also build in flexibility. That's a key issue in policymaking, is you look forward and ask yourself, what sort of flexibility do I need? So they should have moved, but they didn't. And now they have the worst of everything because what you just mentioned is stagflation. Stagflation makes the Fed's policy challenge that much more complex.
Yeah, that's. I mentioned that a couple of days ago. I saw the article that said, "Wow, the invasion is going to force the Fed to change its approach." And I could have seen that it makes them easier or tighter. I could have seen easier, or I could have seen either or both being true. That they actually need to go slower, but it's more important now because inflation is going to be worse. Let me move on to stocks, Mohamed, because one of the things that you've been saying for a while is that the dip buying mentality is very strong, maybe the strongest thing that the market had going for it. And you would let us know when that was no longer the case. We're down a little, correction in some of the averages, but I've also seen a lot of dip buying. Unbelievable last week in terms of in the middle of this looks totally different from any of the geopolitical events we've had in the last 20 or 30 years. This looks much worse and bigger than that. And yet you're still seeing the market go up 600-700 points for no reason right in the middle of the invasion.
Oh, we saw it yesterday, Joe. I mean, think about it. Russia intensified its aggression on Ukraine. Oil prices went up, increases of 12% as of yesterday, 15% of today in the last week. And yet the market rebounded very strongly. That is technicals. That is the role of the buyers of the dip, fearing that they're going to miss an opportunity. So it's still there, and despite markets being lower, actually markets have been quite resilient in the face of everything that has changed in the environment. This is a very uncertain environment. This is a very unpredictable environment. So markets have been resilient. Now, how long will that last? It's getting weaker, and it's getting weaker because the Fed is not injecting liquidity starting from this month. So I expect the strong technical that has seen us through one shock after the other to get a lot weaker this year. And that means more volatile markets, but it also means that there's going to be more pressure on markets.